What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is December 16th of 2019. Well, folks, I hope you all are having a fantastic day wherever you are, and in today's update, we've got to focus in on a central topic that is getting nowhere near the coverage it deserves. It's extremely relevant to the cryptocurrency space, whether we like it or not, and it's the talks of the ECB, or the European Central Bank, discussing about creating a central bank cryptocurrency, or a CBCC, basically a euro stablecoin. Now, this is extremely relevant because it shows us not only how fast the digital asset movement is moving at the moment, but along with that as well, how central banks are going to intervene in this market, how they're going to play a role in this in the long term, and what is a central bank cryptocurrency going to look like. Well, we're going to be talking about all of that and more as we go throughout the video, guys. We've got a lot of info to dive through, but I want to let you all know real quick that this video is sponsored by eToro. Now, for those of you who may not know, eToro is a social trading platform that allows you to copy alongside a variety of traders in the market. You can view real-time stats, check their portfolio, what they're currently holding, and see their performance over time. By simply clicking the blue copy button, you can copy alongside those traders real time. So if you guys want to check it out, definitely check out the link down below in the description to learn more. All right, so let's go ahead here, guys. I want to go ahead and set the setting here as we go into this topic, because we did this very much like we did the other day when we talked about the Federal Reserve news, right? Crypto markets are not that exacerbated right now. They're 2x as an overall market in the sense of valuation from their previous highs, the lows back in December, right? So we were down here pretty much about a year ago from now, back at about 100 billion, and we're sitting at nearly around 200 billion at the moment. You know, anywhere from between 195 to 205 billion. But there's some very interesting things going on between not only the failures of central banks, right, that are continuing to devalue base fiat currencies. There is, of course, mass credit injections in countries like China and all kinds of different facets of the financial sector. I don't want to kind of repeat myself, but we've gone through the dozens of problems. You guys are very well aware of that first portion, but there's another portion that showcases that we need to be paying attention to cryptocurrencies, and that is what's going on at the ECB. Okay, so the person who is really heading this up, and we'll be talking about a lot as we go through this, because, you know, at the end of the day, there is a sense of hierarchy, and she is at the head of this project, and that is Christine Lagarde. Okay, she is the president of the European Central Bank, what would likely be seen as the second or third largest powerful central bank alongside China. The reason why I would say that they're probably the second most powerful behind the Fed is because the euro holds a lot of weight, right? So in that sense, we really need to kind of pay attention here. It's almost just as important as Jay Powell from the Fed announcing that the Fed is going to create a central bank digital currency. So she wants to be ahead of the curve on digital currencies. Christine Lagarde previously worked for nearly almost a decade at the IMF. You guys have probably seen her before. I know many of you might have some opinions on Christine Lagarde. Some are very supportive of her because she's, in many cases, been very different and forward-thinking in some areas of central bank policy and central bank management. And of course, her just stepping into this role back in November of this year shows she's taking a different direction. Central bank digital currencies have been a topic for a very long time, since back in 2015, since there was actually papers being released at the Bank of International Settlements, literally the peak of the entire banking world. And then now in less than a month, she's already talking about it in public. She's saying that they're working towards this. And again, we'll talk about whether or not that's a positive or negative. There's also some people as well who do not like Christine Lagarde and don't generally like the entire banking sector. I would say to step into this, though, guys, not with a black or white view in the world, right? To not just view this down, a lens of just, oh my God, this is the worst thing ever, right? It's still questionable. We're still in some gray areas to what this is going to look like. But let's go ahead and understand what are some of the concerns of the central bank that Christine has openly put out. And we can know that if this is going to launch, that it is going to either combat those concerns or have features that are going to at least try to supplement against those problems. And then from there, we can get a pretty good idea. And I'll give my opinion as to what I think this central bank currency is going to be. Okay, so let's go ahead here. We've got a nice short article here, but I'm going to go down here and get towards the substance here. right? So there was these kind of topics, these kind of precursors she was talking about. We have to understand our objectives. Are we trying to reduce costs? Are we trying to cut out the middleman? Are we trying to have inclusive finance at no cost to individuals, right? So is this stable coin going to have fees? Can someone in Kenya with a smartphone, or not even a smartphone, maybe some very kind of low level device, can they transact with this? Are they going to pay fees? Are they going to have to owe something to the central bank? Or are we going to have to bring this down to where anyone can use it for free? Like, it'd be like me handing cash to you. And basically, are they trying to reduce costs in the long term? Are they trying to cut out banks? Are banks not even going to be a part of this? Is it going to be on a network like Ethereum, or is it going to be on a central bank network? That's the kind of important questions that need to be asked. And I would say the big one here that we're going to see throughout here with the ECB's concerns, or at least the criticisms that people have shown for this concept that Christine has really spearheaded, is KYC. It's about money laundering. It's about terrorist financing. It's all kinds of different things here that she's going to have to really compensate for, because these are fears from stablecoins, right? These are the fears that people genuinely have. Well, let's go ahead here and go through some of these points. A digital currency would give the public a cheap and fast means of payment, but would also have huge repercussions for the financial system and central bank's own policy. And this is sort of true. It is going to provide a very cheap means of payment. If I want to send you stable coins over the Ethereum network now, I will outpace whatever I'd have to pay for a fast settle transaction on PayPal, Venmo, my current, banks in this case. If I wanted to send you money like instantly like this, it's going to cost me much more. Not to mention as well, you can have it confirmed and withdrawn from your wallet very quickly, right? But there can be some repercussions. I'm not going to sit here with a blind eye, guys, and not admit that something that's outside on a censorship-resistant network may have some issues when anyone can generate an Ethereum address. We have to understand the concerns here, right? And really the biggest concern here is know your customer in this case, right? Which, I'll be honest, I don't really think is a highly effective measure. But again, that's the current reality we're in right now. I don't believe in it personally. So let's just go ahead here. So for instance, depositors would be likely to switch into the ECB currency at times of financial turmoil, potentially exacerbating any bank run. I don't really see this as a problem, right? I don't think people are going to go to a European stablecoin from their current euros at a bank. I guess I get it, because what you would see here is that people are like, you know what, I don't trust, my euros in the bank right now. The economy is unstable. Yeah, I'm going to go and deposit it into the ECB stablecoin for the euro stablecoin that they've created. Possibly. But I don't think there's any problem with that. Right? If there's a better chance of guaranteeing that I have ownership in this case, if it really means it's going to challenge commercial banks, I'm happy to see this happen. I very much am. It's going to cause some instability to the euro. I want to see this happen, because if banks are not having the ratios covered for bank withdrawals, that's a fundamental issue, not of stablecoins, but the financial system. It means that we are over exacerbated in the sense of credit that we have created on top of the base currency supply, right? So I don't think that's a problem with stablecoins. Now, stablecoins might, pop that bubble, but, again, I wouldn't blame stablecoins for that. It could definitely cause some issues. I'm not going to doubt it, but I wouldn't point the finger at stablecoins. On the upside, such a currency would allow the ECB to inject liquidity directly into the real economy if it wanted to boost inflation, bypassing the financial sector and potentially making its policy more effective. Now, there's two ways to view this, okay? On the bad side, I don't think any of us want to hear the word inflation, and we don't like to see that the ECB is going to have an easier way to create said inflation, right? At 2%, you're talking about devaluating the entire currency supply in just a matter of a few decades, right? Now, keeping that in mind, let's go ahead and see what could be some positives to this. Well, we've seen over the last decade, whether central banks have tried to or not, they have basically tried in their austerity to generate countless billions, if not trillions of dollars actually in total, if we take a look at the global central bank balance sheet, of I think nearly 12 or 13 trillion dollars in new base money supply between dollars, euros, Japanese yen, Chinese yuan, and much more money that's probably not on those balance sheets, to creating currency to supposedly stimulate the underlying economy. The problem is that most of it has gone towards equities. Banks have not been lending out like they should have. And that's really what central banks promised us in this case, that this money was going to be to stimulate the economy, to grow new loans and create new credit and keep the system going. But really, they haven't been doing much of that. They really haven't. People aren't getting the kind of commercial loans that they should be getting, outside of maybe mortgages or things of that sort. But anyways, I digress. The key point here is that the ECB would have a more direct route to actually get money into the hands of everyday people. And this is something I've talked about for a very long time. I think this is, again, why it's not a black and white world where it's just, commercial banks and central banks, colluding together. There are some people in the central bank world who want to slip out of the world of private banking, and they want to be a nationalized bank. And some people I know who are like anti-banking are in support of this, and some are not. I'd like to know from you guys. There's a key few things you have to keep in mind here. This is a national bank or a national conglomerate of banks, the ECB. But at the same time, this could, it cut out a middleman layer of interest that gets tagged on in credit into the economy. And what I mean by that is that when money's created, there's multiple layers. There's the central bank that charges to borrow money. There is the commercial bank, and it starts to stack on layers of interest, right? So it could be beneficial in that sense. But I'm going to say more than anything, I don't like how the Fed is going to have an easier way to creating inflation, right? All right, so let's go on and talk about the next one. The debate around the central bank digital currency has been simmering in the background for years, but it has gained fresh momentum since Facebook unveiled plans to launch its own private digital currency called Libra earlier this year. So I think this is a given. I think with Libra, coming out, this showcases just how much underneath the surface people are really finally starting to wake up to this idea. I think Facebook made people research, USDC. TrueUSD, all these companies, Paxos, have already been doing this, and it works really well, right? So I think that they realize they're not going to let private companies do this. The Pandora's box has been opened, right? Which is why there's such urgency. The initiative has met with resistance from regulators across major jurisdictions, worried about the implications of money laundering and consumer protection, as well as their own grip on money creation. This right here is the biggest concern to central banks. They want to make sure that this is not going to be used for money laundering, or make sure that consumers are protected. So if I lose my private keys, like a traditional stable coin, I don't lose all my money. And along with that as well, they want to maintain the grip on money creation. Well, I'll say this right off the bat. On the Ethereum network, from USDC, from Paxos, from TrueUSD, you can, KYC the process in this case, right? You can KYC the entry of new money. But to be fair, on these censorship-resistant networks where someone could generate an Ethereum address, we have to be fair in this sense. You can't block money laundering. You can't always guarantee that consumers are going to have their private key, so you have to build much better systems for it. And along with that as well, even though these stablecoin cryptocurrencies, at least the ones that are out there that are pegged one-to-one to the dollar, even though they are usually compliant and only generating the amount of dollars they should, there are projects like Tether, which we're not certain of, at least I'm not certain of, and along with that, you have projects like DAI, which are these new crypto derivatives that have ETH backing them, right? So it's actually outside of the realm of traditional stablecoins, so there's a dollar pegged to each coin. So Ethereum is not providing the needs of the central bank in this case. It's not providing the direct, absolute demands that it's setting for itself. And quite frankly, they're not going to be able to create it on something like Ethereum if they want to meet all those things, right? These are modern realities of a digital cash network, right? Things like this are going to possibly happen, even in a world where cryptocurrencies don't exist, because they've been going on forever. And this is the point I want to get to here. Central banks are likely going to create, the ECB is likely going to not build this on a network like Ethereum. While we are at a point where less than 1% of the world owns cryptocurrencies, they are going to build likely their own digital payment network, something to compete with SWIFT and other traditional banking networks. Rather than doing the standard ACH transfers that we're used to, they're going to have a system where literally in a matter of seconds, through the central bank itself, or counterparts tied to it, they are going to confirm transactions and basically be a centralized database. That's going to be what it is. And it's going to be really upsetting to see that, because that's not going to be unique at all. That's not going to be a stable coin that I want to use. I'm not going to go, even if I had the ability, I would not go from in and out of that and Bitcoin. I would much rather prefer USDC, or one of the ones that I know cannot be stripped from me, right? And I know that under the regulatory guys, that there's a 1-to-1 ratio of cash in that vault. That's a real digital dollar. Same with DAI as well, backed by collateral in this case that I know has real market value. And, again, will be able to give me censorship-resistant dollars. I think that's the coolest thing about it. So again, the major point here is that they're likely not going to do this on Ethereum. They are going to do something that is KYC'd from the front end and the back end. So basically what I mean by that is dollars in, right? In this case, I'm going to, deposit $1,000 to my bank account. I'm going to either have to do it from a commercial bank, or if I'm doing it from cash, I'm going to need to KYC it. I honestly think that's fine. That's not the end of the world. And then also on the way out, if you're withdrawing dollars from the central bank network where they have control into cash, they're going to ask you, what's your name? What's your address? Background, things, that sort, right? And I know, again, a lot of you out there hold that very strict view of, no, this isn't okay. But again, this is how a central bank's going to do it, right? I'm just letting you guys know this is how they're going to run it. So last point here is the EU finance minister said earlier this month that private digital currency should not be allowed in the bloc until, or mainly in the public, until the risks they could pose are clearly addressed. So I think, it's really hard to kind of summarize this all in one. It's sad because this could be really big. If the ECB blows me out of the water, right? If they show me that they are going to create an Ethereum stablecoin that they don't fully control, that they can control the issuance of, and they do KYC, I'm 100% impressed. I'm absolutely going to be impressed. I'm going to take back everything I said. That would be forward thinking for central banks, because they're just basically directly competing with the already existing private enterprise, and they have the authority and the power to do that. I think that would be very, very cool. But the issue that I see is that they're not going to do that they're going to be on a centrally controlled network, that they're going to go back on all the potential that could arise from a central bank digital currency. I will say, if it means like Libra, even though it's centralized, it can reduce fees, that'll make me happy. But quite frankly, if I know my funds can get frozen, all the things that we really care about in the cryptocurrency space, I don't care to support it that much. That's not a real digital cash, right? If there's a database where it's controlled, that's just digital money, right? I would say digital, digital dollars. It's not crypto money in this case that I think we all look forward to. But that may be what the world goes after. They might win out in the end if that's really what they're going to build. Anyways, I digress. I've rambled on enough for today, guys. I'd like to know what you all think about this. I would say this too. And again, this is always in my effort to push you guys, as I do myself, to not view things, again, in a black and white view. I know we don't trust central banks. I think whether actually intentions are good sometimes at central banks or not, I think that in many cases, sometimes they just either don't fully understand the ramifications of their policies, and sometimes they don't fully understand the technology. Right? I've said this for a long time. Listen to what they have to say. These are very short videos. There's an interview with David Rubenstein on Bloomberg, with Christine Lagarde, and then also her segment where she talked back here on December 12th about the European Central Bank exploring digital currencies. Take a listen to what she has to say. And the major thing I'd say above all, is this really the time we should be bearish on Bitcoin when central banks are literally talking about front-running and creating their own digital currencies? I don't think so. I truly, truly don't think so. Anyways, I hope you all are having a fantastic day wherever you are. If you like this video, drop a like. It's always appreciated. But until the next video, guys, I'll see you all in the next one. Stay tuned.